Westhaven issued a preliminary economic assessment in March of this year. Really robust economics, $450 million net present value at a 6% discount rate, using an over 40% internal rate of return. And that was at $2,400 an ounce gold. That was a good price to use in March. Now we move ahead in time to November. Obviously the gold price is a whole lot more robust, and if we plug in the current prices into our model, there's over $1 billion net present value on this deposit. It's developable, all for less than a $200 million Canadian capital cost. So things that we wanted to do this year is to understand, PEA, that's great. We have a low capex in a low cost jurisdiction with excellent infrastructure advantage. There's power right on the property. There's a highway right to the property. That all leads to these lower costs that we see for development. But what do we need to do from where we are now and to get to starting, say, spending that capital expenditure? What are the engineering studies and so on that need to be done? So we've done work to map that out. There is work that we need to do on the geotechnical side, on groundwater and surface water work. We've some baseline data collection for hydrology, so surface water, dust collection, some wildlife work that's been done. We need to now focus that at a project level. We do need to do some hydrogeology work, just to come up with a model for groundwater around the deposit. That's always important for any mine development in Canada, and we mapped out sort of the time frame and how that would work. In British Columbia, we know there's sort of a 2-year baseline environmental data collection window that you need to see, so we have some information that will help with that. And then you enter an environmental assessment process that has a 2-year window on it as well. So in terms of the development plan, we also did drill a couple of holes through the South Zone. The South Zone is the main deposit of the 3 that have been defined so far. About 80% of the ounces are in the South Zone. The purpose of that was to sort of confirm the model, which both holes have done. We just have assays from hole 432, and those assays match what we'd expect to see in the grade. And the grade is where we'd expect to see it from where development has been modeled as part of the PEA. So that is all positive. And the other thing that the 2 holes have allowed us to do is to get moving on some of the geotechnical information that we need to acquire as we head into pre-feasibility and feasibility. So rock hardness type samples, samples that we can and have submitted to the lab to use for metal leaching and acid rock drainage type measurements. So that's kind of an important geochemical aspect that we need to have work we need to have done as we get into feasibility. So those holes have accomplished what we wanted them to accomplish, and to provide that initial information, and that'll help us plan out 2026 as additional infill drilling. There's not a lot that's been planned in the South Zone, and we'll get a better handle on what needs to be done to allow us comfort to get, in particular, that deposit on track and moving through towards pre-feasibility and feasibility over the next couple of years, and in particular what drilling has to happen there in 2026.